eXp Realty, and we conduct our homebuyer workshop every Wednesday at 5 p.m. And this is streaming live right now on YouTube, and we will play it back on Facebook. And the homebuyer workshop is recorded every Wednesday at 5 p.m. Pacific time and 8 p.m. Eastern time. So we have this Zoom call to basically discuss all things related to the home buying experience and just what to expect, because it's a whole process to navigate through. And sometimes it can be very frustrating or confusing. But if you're working with a strong real estate agent, we'll definitely get you through the process and just make the entire process more seamless for you. So on today's call, we welcome Roxana Strallendorf. How are you doing, Roxana?
I'm doing well. How are you?
I'm doing great, thank you. And Roxana, she's with Mission Mortgage based out of Mission Hills. And we invited Roxana to the call today because obviously the interest rates have changed or they're slated to change. And we're looking to see, basically from the lending side, what options borrowers have right now to be more competitive and to just be more strategic and their financing options when they're looking to purchase a home. So what have you seen lately, Roxana, with buyers that I know you work on primarily purchase loans, and that's the bulk of your business, right? Is purchase loans?
That's correct. Yes, I have about 85% of my business right now is purchase business.
Mm-hmm.
A lot of first-time home buyers. I do help a lot of first-time home buyers, but also a lot of experienced buyers as well, investors and multiple home-time buyers.
Okay, great. And so how have your buyers been responding to, the recent changes in the market, as far as any price changes that you've seen, or their loan approvals with interest rates, going up a bit? How have they been reacting to that?
A lot of buyers have gotten a little fearful of the market with what it's doing, the rates going up, but they have also come down just a little bit to kind of even things out. So I had buyers that I had pre-approved a couple of months ago who had been a little bit priced out of the market simply because the rates had gone up. Then there was a slight dip in the interest rate, so they were able to qualify again. But ultimately, a lot of folks are trying to buy homes right now because they realize that the rates are still not that bad. We're not talking 1980s interest rates. These rates
Right.
are still pretty decent. And they'd much rather pay a mortgage than pay somebody else's mortgage.
That's absolutely true. And that's what I've been, encouraging my clients that were priced out of the market last year is, would you rather pay your own mortgage or your landlord's mortgage?
Exactly. And with what rents are doing these days, it's really insane. You can actually rent something for the same cost of a mortgage payment that could be potentially your own.
Yeah, absolutely. And so I know earlier you and I were talking, and as far as the option to get financing through FHA, what are you seeing with FHA? I know for some time, just because of the market and buyers trying to be more competitive, sellers were primarily looking at conventional offers, right? Buyers that have conventional financing, just to streamline that process for them. Because sometimes the FHA lender might want certain things repaired on the property, and they might come out to do the appraisal, and then they might flag something that they don't necessarily approve of. And then that would call for a reinspection of the property and start delaying the process. So what have you seen with FHA loans? Are those starting to make a comeback now just because the rates are more attractive for buyers primarily getting into their first home?
Actually, you're right about that. They are making a comeback because FHA interest rates are much lower than a conventional interest rate. A buyer can typically qualify for a little bit more than your regular conventional loan. Mm-hmm. Because that rate is so much lower, I think sellers are looking at the higher amount that these folks are qualified for and kind of saying, well, conventional, FHA isn't that bad because they're getting a little bit more money for the price of their home because that borrowers are qualified for a little bit more going FHA.
Right.
So I am seeing it make a complete comeback, and the interest rates are probably, between 0.75% to a whole % lower on FHA versus conventional.
Okay, well, that's pretty significant.
Exactly.
You're looking at a whole percentage that's pretty substantial for your mortgage payment.
Absolutely. Yes, it's making a big difference. And that's why folks are able to qualify for a little bit more. Also, FHA does allow for higher use of income. So I can actually, instead of being capped out at 50% of my DTI, I can go all the way up to 56% on the back end with an FHA mortgage. And that just means that FHA allows you to use 56% of your monthly gross income versus conventional, allowing you only to go up to 50% of your monthly gross income. So you're able to qualify for a little bit more.
Right. So that could potentially push you right over that cusp of whether you were approved for, let's say, somewhere between maybe 500 and 550 or 525.
Exactly.
Push you right over to the next bracket that you would need to be in to be successful in that purchase.
Exactly, making it a lot more lucrative for sellers to consider an FHA these days versus a few months ago when they would only consider conventional because it was quote unquote easier to get financed that way.
Right. And that's what I've seen too. I mean, last year, for example, I had, in the heat of the market when we have, we're stuck in this bidding war scenario and multiple offers. I was a listing agent on a property that I was selling in Santa Ana in Orange County, and the buyer had an FHA loan. But they had offered, the rest of the offer was really, really solid. I mean, as far as the price and the terms. So my seller was comfortable with accepting the FHA offer as opposed to some of the conventional offers we had. But something so minor, I mean, there was a little bit of paint peeling on the edge of the eaves of the garage. And the appraiser that was there said, you're probably going to have a reinspection. And I had asked him in the beginning, let me know if you see anything that might cause a reinspection for you to come back out, because the last thing we want is to have a delay. We want to avoid any delays. And if there's something that we can take care of, we'd rather do that ahead of time. So, of course, he looked around the property, and before he even started taking pictures and doing some measurements, he said, I can tell you right now that this paint here, and he's pointing to the top of the garage, he said, that's going to cause a reinspection. And so I advised my seller, and he said, he was really nice, the appraiser. He really worked with us. He said, I'm going to finish the appraisal. I'm going to take all the pictures, but I'm not going to submit it yet. If you want to have that, it was literally like 2 feet of wood at the edge that was peeling. So he said, you can just have that repainted, send me a picture, and then I'll go ahead and complete the appraisal and submit it to the lender for review. And that's exactly what we did. So thankfully, the appraiser was very flexible in working with us, and we were able to, have that painted that afternoon, send a picture to the appraiser, and it was taken care of. So,
yeah, that's a good story. And a lot of appraisers these days seem to be a little bit on the nicer side because they're so busy. They work with the listing agents and the sellers. They do work with the lenders also very closely. But another thing I wanted to add to what you just said, you said something as simple as the peeling paint, right? It's simple. It's minor. You scrape it, you paint it,
right?
Problem solved, right? So that's one of the biggest differences between FHA and conventional financing when it comes to the appraisal is peeling paint. It's not that hard to fix. So for a seller to go $10,000 less to purchase or to accept a conventional offer, because FHA, I think people are more scared of FHA appraisals these days because they've gotten a lot of pushback in the past, but it's usually something super minor. Peeling paint is super minor. If I had a broken window, I would have that same issue with a conventional appraisal. If it had missing tiles on the floor, same issue for both conventional and FHA. That is one of the major issues with an FHA appraisal, but it's also very minor.
Right. And so those are things to be aware of when you're getting an FHA loan. I think especially right now, because you said that FHA loans are making a comeback, because we didn't really see them the last 2 years. I mean, it was very sparingly that we saw an FHA loan. You know,
Exactly.
most of the financing was coming through conventional or cash, right? We had a lot of cash buyers too.
A lot of cash.
So I think it's important, whether you're representing a buyer or a seller, to pay attention to not just the interior, but exterior of the home. And when you're walking through the home with the client, just really look around, and things that may seem minor to us might cause that kickback with the appraisal and call for a reinspection. So it's really important to, pay attention and just really take a good look around as you're walking through the home.
Exactly. And a lot of folks, I think it's just, I don't know where it happened, but somewhere in the last few years, they started, I don't want to call it bad mouthing, but essentially bad mouthing FHA appraisals, when in reality, it's not even that bad. And you can finance a whole lot more. And that's usually just one of the major things. But I'm so glad they're making a comeback, because they do allow for much lower FICO scores to qualify for a very decent interest rate. You can go as low as a 500 FICO on FHA. You have to put a little bit more down, typically 5 to 10% for the down payment. But if you have a 500 FICO, shoot, and you can buy a house, why not? Yes, you have to use an FHA loan. That's the only loan available for that FICO, but it allows for a decent interest rate. And you're not going to get a 7 or 8% interest rate on that. You're still going to get something in the fives. For an FHA, for a 500 FICO, it's unheard of.
Right. And so, Roxy, with an FHA loan, are you still able, does a buyer have the option to buy down the rate if they wanted to?
Absolutely, yes.
Okay.
If they have the funds available, of course. And also remember that anytime you buy down the interest rate when you purchase a home, that's the same thing as paying upfront interest. So it's also tax deductible when you're purchasing your primary residence. So whenever you buy it down, it is tax deductible. It's interest in advance, essentially.
Okay. Well, that's really, I think, really positive and attractive. If you can buy down your rate, pay a couple extra $1,000s to even buy it down like 1 percentage point, that'll make your payment more affordable. And then you have the tax deduction write-off.
Exactly. If people don't understand that, they don't realize it, but it is a huge, huge refund at the end when you do your taxes.
Mm-hmm. Okay, great. So what is the, I would say, is there a maximum borrowing amount for FHA for residential?
So for up to one unit, you were going to test me today, right? I believe it's about 746,000. So they do allow it to go up to high balance.
Okay.
I can look them up really quick, but yes. So
that's okay. Just a rough estimate.
Yeah. So for one unit, about 746,000. And it also is county specific. So I did run into this with Kern County. Their max loan amount is much lower than, say, Ventura or Los Angeles.
Mm-hmm.
So it is county specific. You just have to look up the guideline.
Right. Okay.
And it's a simple Google search, FHA loan limits by county.
Yeah, and I do remember that it does vary by county. So I do recall that from our last call that we had also a few months ago. And usually with FHA, there's no prepayment penalty, right?
Correct. There is no prepayment penalty. The big difference also between the actual loans, conventional and FHA, with regards to the PMI, unfortunately, back in 2013, FHA did make theirs permanent. Whereas conventional, when you pay your loan down to under 80%, it can go away with a new appraisal. And talking to the lender, obviously, so the conventional PMI can go away, but FHA is there for life, unfortunately, unless you refinance, of course.
Right. And that's what I was going to comment on next, because I bought my home here in Downey with an FHA loan. The price was $400,000. I think I put down $14,000 plus. And that was a pretty low amount for me to buy a home as a single mom. So that was really fascinating that I could purchase a home for me and my family, get situated here in Downey where we wanted to live, and only pay $14,000. You know, it's a good chunk of money, but it's much less than coming up with, let's say, a 20% down payment.
Exactly.
Yeah, and after about, I think it was about a year and a half, because the values were going up substantially, I was able to refinance and get into a conventional loan. So I was able to get rid of the PMI,
That's good.
which I think at that time was about 250 or 260.
Exactly. It is. It's like a small car payment sometimes, depending on the value of the home, but it is a significant amount of money that you can refinance out of. There is no prepayment penalty. I can't remember. I've been in this business for about 20 years and I can't remember if FHA has ever had a prepayment penalty. But yeah, so it's a great loan though.
Mm-hmm. Okay, great. And I know the last time we had you on the call, we were also talking about the forgivable equity loan. Have you had any buyers successful in obtaining financing through the California Forgivable Equity Loan Builder Program?
I wish. I really, really wish. Unfortunately, the biggest issue with that program is the income limitations. So in the areas where I do most of my business, the values are too high for folks to qualify in that income bracket.
Right.
They are in the Ventura area, if I'm not mistaken, it's about 89,000. Whereas in the Los Angeles area, we're capped at about 79,000 per year. And that's not household income, that's total income. So it's really hard to qualify somebody for that. Unfortunately, I have not had success with that. But they are going strong, is my understanding, in the smaller loan amount areas.
Mm-hmm.
Yes.
Okay. So yeah, it depends on your income, because I think for LA, it's just over 68,000.
It went up a little bit.
LA County. Oh, it did. Okay.
Yes.
Mm-hmm.
Just recently.
Okay, great. So as far as somebody that's looking to get a loan right now, what are the challenges that you've seen, or I should say things that maybe they shouldn't do right now if they're looking to possibly start an application for a loan? What are the things that a buyer should avoid?
Please don't buy a car. Please, please, please don't buy a car. Don't co-sign for anyone. Don't bring up your credit cards. Try to pay them down as low as possible. If talk to a lender, make sure that they run your credit, they pre-approve you, and then they can give you some good, solid advice as to how to stay on track so that you can get into a home in the next couple of months, if that's your goal. And if you need credit repair now, we have a great guy, Jeff. I'm working with him.
Oh, okay, great.
Info. Yes, I'm working with him and he's great. We can put you on a credit repair program so that we can get you the best interest rate when it's time, when it's your turn to buy. But please don't buy a car.
Yeah,
don't buy furniture. Not yet.
How does co-signing for an apartment affect you as the, if you're going to be the primary borrower? How does co-signing for, let's say, your child, adult child that's getting an apartment, how does that affect your approval?
Okay, so if you are co-signing for an apartment with one of the smaller apartment complexes that don't report to credit, then usually the lender doesn't know about it. They won't find out about it. However, if it's a company that's going to report to your credit report, then as long as you can prove that your child has been making the last 12 months payments on time through their checking account of their own, where you are not a joint account holder with them, as long as they can prove that, then it will not affect the primary borrower on the purchase.
Oh, okay, great. That's good to know, because I did have that question come up recently with a client of mine. They're looking to get a loan. So I should say they're looking to start the process pretty soon. However, a few months back, they had co-signed for their adult child that was getting their first apartment. And so I thought, well, that could affect you, but I guess it also depends, like you said, on the apartment where they're going to live, and the complex and the size, and whether they're going to report that to the credit bureaus.
Exactly.
So it's kind of like you're rolling the dice if you decide to co-sign for housing for somebody else.
Exactly. And then I'm certain that there are some lenders out there, say, for example, someone did that and in 6 months they decided to start looking to buy a house, and they only have 6 months proof. I'm certain that there are ways to get around it with a letter of explanation possibly, or proof that your child solely put that down payment, the deposit rather, and the first month's rent, and they've been paying on time from their own account, where the buyer is definitely not depositing or Zelling or Venmoing their child any money. So it doesn't look like they're paying a portion of the rent. Do you know what I mean? That way, I'm sure we can get away with that as well,
Right.
if it's less than 12 months.
Okay. And so, right, so just providing that documentation to support that you're not financially contributing to the rent, you're just lending your credit for the sake of getting the application approved for the house.
Exactly.
Okay, wonderful. So we don't have any questions. I know I'm streaming this on YouTube. But I don't see any questions right now. Is there anything else that you'd like to add right now, Roxy, as far as, you know, we talked about FHAs making a big comeback because that wasn't really happening the last 2 years, where we were seeing mostly conventional financing being accepted. What about VA loans? Are you seeing any VAs, you know, happening lately that are basically being accepted and not shunned by the sellers?
So that one I wish was making as big a comeback as FHA. Unfortunately, I do not see a lot of VA come across my desk. I had one buyer that we're finally in escrow that we tried since February, and we finally got her into escrow, and we're going to close the first week of August. Unfortunately, that one, I don't see a lot of comeback on it. However, it is a fantastic program that sellers should absolutely consider, especially to help our servicemen or former servicemen and help them buy a home. I mean, they served our country. We should be pushing that program more, and we should be accepting it more.
Right. I agree. I have a veteran buyer right now, and he's looking for some documentation because he had a pre-approval that expired from a lender where he has his checking account, but they said we cannot get the certificate of eligibility. They contacted the VA, and I guess there was some issue where they couldn't find his information. So they put it back on my client to contact them and get that information. So I'm not sure if you're familiar with VA loans and the certificate of eligibility, but how long does that process normally take to obtain?
I have actually, I'm going to send you a link where your borrower can go on and create an account. And
Okay.
as long as he has his DD 214 or all of the information from his discharge, where he was stationed, his DOD number, as long as he has a lot of the information, he can plug it in there and it'll actually bring up the certificate of eligibility. And if that doesn't work, I actually, the lady I was just telling you about, my lender is the one that looked up her COE because her DD 214 was so old, it was so faded, we couldn't read any information on it. So they pulled it for me as long as I was able to give them specifics about her discharge. So my lender actually did it for me. Yes, but I do have a link for you that I'll email to you later.
Oh,
so maybe it could help you.
Fantastic. I think that would be very helpful because sometimes when the buyers are going through this process, they're not really aware of what it's going to take even to get that. I mean, sometimes you think that the lender is going to handle everything for you. And although they do their best, sometimes you run into these little hiccups where, like in this case, you know, we hit a snag where they couldn't get the certificate of eligibility. And now he's looking into that to see how he can get it. So thank you.
Yeah, absolutely.
Helpful. Okay. And I know the last time we were talking about, so we talked about FHA, VA loans, conventional. And I don't see any questions right now. So I think we'll go ahead and just start closing out. But if somebody wanted to apply for a loan, whether it's FHA or conventional, what are the basic documents that are needed to gather up front?
Typically, it's 2 years of tax returns for self-employed borrowers. If you're not self-employed and you work for a company, 2 years of your last 2 years of W-2s. I would need to see 1 month of pay stubs, 2 months of bank statements for all the asset accounts you own, including any retirement accounts, 401k, any money market, investments, anything you own where you have money that you can pull out of. Please gather at least 2 months bank statements for that. picture ID, and then we're good to go.
Okay, fantastic. So Roxy, thank you so much for joining our call today. I'm glad that you were here and you were able to give us all of this information with the latest. And if somebody wanted to reach out to you, what's the best way for them to reach you?
Well, my phone number is 323-376-9260. And you can also go on my website at www.roxylens.com.
Okay, great. And I am Patricia with eXp Realty and my colleague here, Bill Gross, and we host this call every Wednesday at 5 p.m. Pacific time and 8 p.m. Eastern time. So thank you everybody for joining today and watching on the live stream. And we wish you all a wonderful evening.
Have a good night. Thank you so much.
Bye-bye.